Stuart Gray, MEPS steel price analyst. Good to have you back in the Speaking of Steel studio for another Marketing Minutes episode. How are you doing?
Very well, and thank you for the invite back. And how are you doing?
Very good. We're constantly recording these new episodes, so it's great to have a bit of variety of people contributing in. And you're going to take us through a bit of an update on Northern Europe in particular, which will be drawing on research from the European Steel Review in May, and there might be a little bit more new information that you sprinkle in there, I suspect. But I mean, I think one of the things you mentioned before, we've been noticing that Northern Europe's producers have been cutting capacity in light of the low demand that we're seeing at the moment, and we're also seeing the repercussions of the revisions to the EU safeguard measures. So how has that been affecting supply of steel in Northern Europe?
I think there's no doubt that steel mills, wherever they be located, do change their production output from time to time, depending how the market is doing in terms of volume. But certainly in Europe, there has been a downward trend in terms of capacity utilization. And just for a case in point, if you look at Germany, the first 4 months of this year compared to last year, they're already just below 12% down in terms of their output as a country. And that trend is followed right the way through the rest of Europe. In actual fact, if I just add, a company like ArcelorMittal, for example, has idled blast furnaces in France, both in Dunkirk plant and for Saumur. So mills will do that to try and get that equilibrium back in terms of supply and demand. At the moment, we don't find that's working too well. There is high inventory in the marketplace, and that needs to be worked out. I think as well, in terms of our feedback from our research partners in Europe, after Easter, they expected maybe the market to ramp up a bit. That didn't happen. And there's a few reasons why. There's obviously the revisions of the safeguards that took place that held back buyers' decision-making process, and also the trade policy uncertainties, especially with the EU trade discussions with the US not finalized. And we heard over the weekend now that Donald Trump has imparted Section 232 tariffs, an increase of that from 25 to 50%. But I think even before, the uncertainty of those tariffs, the reciprocal tariffs, has been in the back of decision makers at companies across Europe, and that staves the flow of investment. If you take the UK, for example, maybe in a slightly better position, they already had their agreement on the 10%, but currently steel tariffs are still set at 25. They've escaped the additional 25, but still, that also plays a bit on the minds of various decision makers. So consumer activity in Europe also remains weak, and consumer confidence is down, and you need that to increase those products that utilize steel.
Yeah, I think you're probably touching on some key points for the next question I was going to ask, really. I mean, we've heard a lot about trade negotiations. Governments, banks around Europe have been cutting interest rates in recent times, and there's been a lot of talk about infrastructure investment and investment in other areas as well. Are these things succeeding in spurring a little bit of supply and of demand, in the market? Is that happening? Is that coming to fruition?
I'm going to answer that question at the end of my response, because it could be simply put. But just to give some background, yes, those ongoing trade discussions are going ahead between the US and the EU. But again, speaking with our research partners, I would say most, if not all, are adopting a wait and see attitude, and sitting back on the sidelines, just observing what's happening. During Q1, there was an increase in terms of expenditure on inventory fill-up, and that was to escape any sort of possible interference with tariffs, whether it was import or export, especially into the US. In fact, some companies that we speak to have already seen a downward turn since the weekend's announcement of that increase, with regards to their orders placed. And there has been cancellation. So that's all going to have an effect on the overall supply and demand. And I think in terms of the current interest rate levels being stagnant, there has been some reduction of late, but it's not really conducive to bringing back the investors and the confidence. Germany did recently announce their infrastructure spend of 500 billion euros, and that will be spread through other infrastructure, defense sectors, data infrastructure, as well as health. But that's going to take some time. It will probably take the next year in order for those projects to come to fruition. The UK as well has announced a very significant increase in their defence expenditure, and this will drive long-term demand for steel. It will also stimulate the GDP in Germany and across Europe. But quite frankly, at this stage, demand is regarded as stable, I must say. There has been some drop-off depending which sector you're supplying, but no major excitement in the market. So to get back to your question, a simple yes or no, well, at this stage, not, but with hope going forward.
Yeah, we'll try and retain that, Stuart, on behalf of our research partners, I guess. Finally, touching on a lot of the subjects that we've already discussed, can you perhaps give a little bit of a taste of what the outlook is for steel prices in Northern Europe?
Yeah, I think just having a look at what's happened, say, in the past quarter, in Q1, prices did steadily increase, but we peaked probably last month, and we're now going to see a tapering off of that price. The prices are going to drop off somewhat. If you take our average forecast for the domestic transaction price in Europe, which is made up of Germany, France, UK, Spain, and Italy, in terms of their production output, it's going to fall probably to around the €615 a tonne mark over the next 2 months, and probably stabilize, and then we see a upward trend. But by the time we get to the latter part of the year, it's back to where we were, around about the €630. No major shakes in the price at this moment, but as we all know, over the past 5 odd years, since COVID at least, prices can change very quickly depending on what type of events are happening, not just regionally, but also globally. Again, the mills were trying, and still trying, to push the prices up in Northern Europe. But again, our research indicates that maybe not as successful as they would like it to be. Again, there's been no post-Easter rebound. The clarity, and I know I'm going over it, but it's really important, the clarity on the EU steel import safeguards, the ongoing weak demand, and also the lower input costs is also negating the mills from pushing the prices up. So Tom, the short-term outlook for Europe is there's no major uplift in real steel demand just yet. Market expectations suggest that probably demand might pick up in the latter part of the year. Steel buyers and manufacturers will proceed with caution. Maybe a partial recovery expected after summer, following the outages of some mills and some operations. And steel mills will continue to aim to maximize their spot pricing away or outside of the contractual agreements. The medium to long outlook maybe a little bit more positive. In the short term, I think the ongoing interest rates that are expected to come down will improve consumer and business purchasing power. And that should stimulate sectors such as the automotive and the construction sectors. Germany's upcoming public spending will also provide a much needed boost to activity in the market. And then we mustn't forget about CBAM, the Carbon Border Adjustment Mechanism that will kick in January next year. This will have an opportunity to raise import costs, and it will create a bit more level playing field for steel producers in the EU, and that will offer price support for the domestic mills.
Okay, well, Stuart, thanks ever so much for that summary. Really great to hear your insight and the benefit of the knowledge that's passed on from MEPS contacts around Northern Europe. So thanks again for joining me.
Absolutely.
It's been great. I hope to have you back soon.
Thank you, John.